Hey everyone, welcome back. This is Kirk here again at optionalpha.com, and this is the video recapping all of our trades for both Tuesday, August 12th, only one trade that we made on Tuesday, and then also all the trades that we entered today, August 13th, which is a Wednesday. So as always, if you guys have any comments or questions, feel free to add them right below this video. I'll get back to all of those tonight or tomorrow before the open. Now, we had a pretty busy day today on Wednesday with two new opening trades, two calendars, and then also one more adjustment to our LinkedIn trade that I want to go over. So first, let's go over actually the closing trade that we made yesterday, Tuesday in LinkedIn. So as many of you know, we got out of our short call spread that went all the way into the money because LinkedIn jumped so high after earnings. So we originally had the 175, 180 call spread, and we bought that back for a 501 debit. Now, a lot of people had asked on the blog and also sent me comments in email and saying, Kirk, well, the max loss is actually 500. So why did you actually place an order at 501? Well, we had an order that was working at 500 for the last 2 days. So we were trying to close out the trade for 500. But one little trick that you can do is that if you have a position like this that's already in the money and basically is at a very high risk of being exercised and being dealt the stock in one way or another, then you can actually bid just a penny over max loss. And although you do pay $1 higher than max loss, it's much better than going through the exercise process with your broker, in which case they're going to charge you a really high commission fee to exercise or get assigned or whatever the case is and convert the stock and then sell the stock or buy the stock back. All of that stuff is a nightmare process and commissions versus just paying this extra 1 penny over premium. So I tell that to a lot of people in my premium coaching program. If you have a position that goes all the way into the money like it did with LinkedIn, just pay $1 over the max loss. You'll get filled very quickly. And that's what we ended up doing. We said, you know what? It's been long enough that we've been sitting here at $5 as far as a bid, and we just bid it over by 1 penny and got filled almost immediately. So we'll recap the entire LinkedIn trade once we actually go through the rest of August's expiration as far as profit and loss. But that side of the trade was the biggest losing side of the trade, but we've actually had pretty good success with the strangle that we put on as an adjustment. So that kind of really dovetail into the adjustment that we made today, which is rolling up again for the second time our put side of our strangle. So if you remember originally, we had the 190, 215 strangle on LinkedIn for August, the same expiration month, and we did this right after LinkedIn had jumped higher after earnings. And LinkedIn has continued to move slightly higher every single day. So we've rolled not once, but twice the put side up. So originally we rolled it up to 205 and took in a credit of around $1. I think it was just a couple pennies shy of $1. Today we again rolled that 205 up to 215. So the actual logistics of that adjustment is that we entered a vertical spread in LinkedIn. So we sold the 215, bought back our 205s, and the net credit between doing that is an extra 191. So as always, I tell people about adjustments to strangles and especially trades that happen after earnings. You always want to be adjusting the side that is not being tested. So in this case, the market is testing us on the top side of our trade, so on the call side at 215. So we want to adjust the other side of the trade and come a little bit closer now to the market, and we did that today, a lot more aggressive because we only have a couple days left to go till expiration. Took in a big fat premium that kind of continues to help add to this premium and moves out our break-even points even further away from the market. So I think right now our break-even point is another $3.50 or so away from the market where it is. I think it's actually maybe even a little bit more than that, about $3.50 away from the market right now. So even though our strikes are pinned both at call and the put at 215, we basically have a straddle at 215. Our break-even points, because of all the adjustments that we've made, has our break-evens about $3 plus away from 215. So 218 on the top side and 212 on the bottom side. And by doing that, by adding these adjustments and taking in more credit, that's really how you kind of help spread out that that position over a bigger window of opportunity. So at the end of the day, I'm really excited about the LinkedIn trade. Hopefully, unless something goes really haywire tomorrow or on Friday, this actually looks like it's going to be a really good adjustment for us, and definitely a trade that's going to reduce our overall loss in this position. So here's a chart of LinkedIn just so you guys can see it. Again, we originally had the 215, which we have not touched, so we're not touching this call side, and we had the original 190, which was below the market. Well, we first rolled that up to 205. So just a couple days ago, we rolled it up to 205 again because LinkedIn's moving higher. Whoop, sorry about that on the cursor. But because LinkedIn's moving higher, we rolled that up to 205. Now that LinkedIn continues to move higher, we went ahead and closed out of our 205s and rolled it up to a straddle. So the exact same strike price, but we sold both a call and a put at 215, and that gives us really kind of pinning our strikes right around 215. So we'd like LinkedIn to continue to trade fairly normal for the last 2 days of the expiration cycle. If we go here to the risk profile graph of LinkedIn, you guys can see exactly what this looks like. It's a very wide straddle in LinkedIn and really centered around 215. The stock closed right at 215.14 today, so we've got a very wide straddle on in LinkedIn. And again, like I said, break-even points that are much further from the market than actually at 215. So we've got a really big window of opportunity here in the last 2 days to really turn this thing around and reduce our loss in a big way with LinkedIn. So we'll continue to monitor that, but that's the kind of the logistics of our adjustment with LinkedIn. As far as opening trades, we had 2 opening trades today, and I'll cover these really quickly. They're just basic calendar spreads. We had a lot of success this month trading calendars, and we're hoping to do the same next month. Both of these are call calendar spreads, so we're getting a little bit bullish with our calendars. With Intel, we went up to the 36 calls, and again, with a calendar, you're buying that back month, which is October, and selling the front month, which is September. So same thing with Facebook. You're buying the October options or the October 177.5 calls and selling the front month, which is September, selling the 77.5 calls for September. Now the difference in premium for the buying and the selling that you do in Intel, we paid a 34-cent debit, and with Facebook, we paid a 99-cent debit. So you'll also notice too, and I bring this up just quickly as far as risk management is concerned, we're doing these trades very small. So even though we did 3 of these Intel calendars, because they're only a 34 to 33 cent debit, that basically brings us to about a $100 investment. And that's about the exact same investment that we have in Facebook, but we just did it with 1 spread instead of doing it with 3. And just how the pricing worked out for Facebook versus Intel was a little bit different for their spread, so each of them were different. But again, we're still trying to match up our risk on both of these trades. Make these trades very small bets. Again, calendars and debit spreads should not be a huge part of your portfolio. It's more of a means of staying active in the market and getting a little bit directional in some of these securities. Okay, so for Intel, we want Intel to go up to 36. If we go here to the chart of Intel, you guys can see that it had a really nice jump today, which is good. That's what we want to see. So we're kind of playing this little mini breakout that it's had. It had great earnings, kind of retraced that move a little bit, sold off a little bit after earnings, some profit taking, which is very normal, but we're hoping that it continues this move. And we put a pretty big target on Intel that it would go up to around 36 between now and September expiration. So that's our target on Intel. With Facebook, we're looking at 77.5. So again, a little bit more of a jump in Facebook. Same basic idea with Facebook is that it had a good jump after earnings, has sold off after earnings, which again, very normal, some profit taking in there. People are getting out of the stock after taking a profit after earnings. But if we can continue to see Facebook move higher, 77.5 would be a very manageable and reasonable target for Facebook to get to. So the whole idea with both of these trades is that we're trading low implied volatility right now, so if the stock rallies or if implied volatility goes higher, we'll absolutely make some money in these trades. Not a lot of money, but we'll definitely make a couple dollars and stay active in the market. So as always, I hope you guys really enjoy these videos. If you have any comments or questions, please ask them right below here. I'll get back to all of those tonight or tomorrow before the open. And if you're watching this video somewhere else online or on YouTube, you just have to understand that you're actually getting this video about 15 days after it's sent out to our members. So all of these alerts and this video that you're watching right now is sent out the same day to all of our members at optionalpha.com. So if you want more alerts like this and more video tutorials every single night about all the trades that we make, go ahead and check us out at optionalpha.com. Start your free trial. You get access to everything that we have free completely for 7 days and see if it's worth your investment in time. As always, happy trading.